This is the mortgage housing update as of November 12th, 2025, and let's go through the rates. So according to Freddie Mac, for your 30-year conventional conforming loans, we're hovering around 6.22. For your MortgageNewsDaily, 6.34 versus 6.06 for your FHA. So let's use an example. So let's say your loan amount is $700,000. For your principal and interest, your mortgage payment is going to be $4,351 for your conventional and $4,224 for your FHA. Okay. And yesterday, the bond market was pretty much on the lower end, and that's why we saw the mortgage rates go up a little bit. And in the headlines, we see mortgage application increased in last week. This is your MBA weekly survey, which is a good sign for the mortgage industry. And you can see that the demand for home buyers hits the highest levels since September, right? Even though we have interest rates on the rise a little bit, right? We're still on the lower end compared to a few months back where we saw 7% as well. Okay. And if you're trying to see which area has the highest or, with the largest gain, you see Nassau County and Suffolk County nearly 9.4% in price increase there. Okay. And we were talking about 50-year mortgages, right? We're seeing in the headlines, we're seeing a lot in the news that, there may be a 50-year mortgage, option available, but you want to stay away from it even if it comes true. Why is that? Because you're going to end up paying interest a lot more than any other mortgages out there. How much more? So let's compare it. If it's a $300,000 loan for 30-year mortgage, you're paying total interest over the life of that loan $369,000 versus if it's a $50,year loan, you're going to pay $755,000, nearly $400,000 more if you go with a 50-year versus a 30-year, right? Same thing for $400,000 value or $500,000 value, you're going to pay nearly double than what you would pay for 30-year mortgage, right? What you want is a 30-year mortgage conventional loan. This is what we see that the most people go with, where you do need 620 credit scores. You can put down low as 5% for this, right? If it's going to be a one unit and you're going to live there, or 15% if you're going to live there and it's going to be one unit you're going to live there and the other one you're going to rent it out, right? But if it's going to be an investment, then you do need 20% depending on how many units you have, okay? So these rates change on a daily basis. If you want to know how much you qualify for, please get in touch.